Welcome to Yahoo Finance presents Recessionomics. We are in a recession, whether it's been officially declared and put in the history books or not. You know it and we know it. And we have been getting inundated with questions from viewers and readers about the stock market in a recession, your job safety during this time, and whether or not it's a good time to buy a house. I want to bring in the Yahoo Finance all-star team to answer all of your recession questions. My co-host, Myles Udland, one and only Rick Newman, and of course, we couldn't do this without Brian Cheung. We are all here to answer your questions. There are lots of them. Later on, we're going to have Professor Campbell Harvey from Duke. He's going to discuss the outlook for the economy. And then we are going to dig deeper into real estate because I know you're all interested in your biggest investment, your house, what you're supposed to do with that. We've got Zillow economist Skylar Olson. But let's start with our all-star team. The number one question that we have been getting from viewers is what is going on with the stock market? Why is the stock market going up, Rick Newman, when the economic data keeps coming out and it is the worst that we have seen? We keep getting data. We're like, oh, this is the worst in history. This is the worst since the 1930s. And the stock market keeps going back up from its lows. What's happening?
So I'll give three quick answers and then let Myles and Brian elaborate. First, obviously, all this support from the Federal Reserve probably propping up stock prices to some extent, perhaps to a huge extent. Second, investors don't look at what's happening today, or certainly not what happened yesterday, which in a lot of the economic data lags. The market tries to look 3 months out, 6 months out. So the market seems to be guessing that things are going to be better in 3 months or 6 months. And I think the third explanation is that the market could be wrong. The market might be going up when it shouldn't be going up.
Myles, can the market be wrong?
Of course, the market could be wrong. I think, Rick's first answer is why the stock market went up as quickly as it did. And it's because the Federal Reserve said that what we had in 2008 was a liquidity crisis. There was a crisis in the banking system. Now, this started elsewhere. This remains a public health crisis first and foremost. And the Fed has said time and time again that they are not going to let this turn into a liquidity crisis in the economy. There's going to be a lot of other problems. I think we have a labor crisis right now. The restaurant industry is in crisis and is probably going to take many, many years to sort out what its future looks like. But those problems, in the Fed's view, are not going to be created by a lack of money in the system. And all else equal, if the Federal Reserve is saying, we're going to make sure there's enough money in the system, that is going to be positive, or at least investors have learned to believe this will be positive for risk assets. And I think that's the simplest thing that has backed the stock market. Also, and Brian can speak to this as well, the economic data have been so bad that it's kind of a simple bet. Investors don't think it will keep getting worse. Even though it's going to be bad through the summer, it won't get worse at an accelerating rate. And for financial market investors, that is often good enough to price assets at a higher level, even if slightly higher than they were just a bit before.
And Myles is right on that point. When we look at the economic data, there was a tide change in the sentiment between those people that were watching things like the jobless claims on that Thursday morning in March, where everyone saw and realized just the depth of this recession. It caught national headlines. Everyone was tuned into just how sharp it is. Here we are in, week 8 or week 9 now of a lot of the widespread shutdowns across the country. And you have people that almost are desensitized by that eye-popping multi-million number that we see every Thursday morning. And it was the same thing with the March and the April jobs reports. People are just kind of charging through those reports because we've already acknowledged that things, yes, they're going to get worse, but things are already so bad. The marginal difference is not any more shocking than it was the week before that. But to Rick's earlier point, yes, there maybe is this idea that the stock market is pricing in expectations for the future. But I would argue that as we really see the carnage that's being done to the labor market, as Myles pointed out, but also structurally to just the types of businesses that might not make it to the other side of this, businesses that will have to shut down, whether or not it's the one on Main Street or the one that's going to be some large corporate that could be in danger of defaulting because they can't issue any debt. There's concern there that maybe this recovery is going to take way longer than many people had anticipated. So the stock market could be pricing in some recovery that's not even going to be 6 months from now or even a year from now. But regardless, that's what the anticipation is on Wall Street. And we have to note that even the Federal Reserve in its financial stability report just 30 minutes ago saying, quote, the economic fallout, if it proves more adverse or financial system strains reemerge, it said asset prices could remain vulnerable to significant price declines. So it seems like even though we might not retest the same bottom that we saw in March, it seems like we're not necessarily out of the woods yet, despite all the green that you've seen in the past few weeks.
And to Brian's point, we just have no idea what the depth and length of this recession is. And Rick Newman, there were a lot of questions about that. Sort of when will we know that the worst is over and what the outlook for the recovery is? What are the experts saying about that? Because look, people, you realize maybe you've lost your job, but you think it's going to come back. I mean, how do we know how quickly this is going to happen?
I've been reading a lot of economic forecasts trying to get to the bottom of this. The way I see it, economists predicting a V-shaped recovery, which would mean a quick recovery, it more or less proportionate to the decline. That's in the they're in the minority. More economists think it's going to be a drawn-out recovery, and I think there's a big difference between the worst is behind us and when this starts to feel good again. So let's say the house is on fire and we've put out the fire, but the house is still burned down. So now you have to deal with, it's not like you can inhabit the house. So we've got a lot of work here. And my guess is that by the end of, this is not a guess, this is what economists are saying. By the end of the year, we're going to see an improvement in quarter-to-quarter GDP numbers. It might look like a sharp improvement, but when you look at it overall on an annualized basis, GDP this year almost surely going to be lower than it was next year. And it could take a year or two before we're back to growing GDP on an annual basis. And we just need to remember, we have had 3 jobless recoveries in a row. That doesn't mean literally jobless, but jobs very slow to come back. It'd be great if it's different this time. Maybe some of that stimulus from Congress will help. But I think this time next year, I think we're going to be still way below where employment was before the outbreak.
Well, I think to Rick's point, when you look at the recovery, I think you have to take it in 2 parts. The first part is, how do we get through the worst of this phase? And I think there's a lot of optimism, and given what Congress has done, that by the end of this year, things will be, let's say 80%, 90% repaired in some way. But as we learned after the financial crisis, the knock-on effects, how long it takes for employers to grow bullish on their prospects, staff up in a big way, how skittish are consumers to take on any kind of leverage, to buy homes, to move is a big part of labor market dynamism. And I think those effects are likely to linger for quite a while. Now, a potential positive here is, there's a lot of millennials who are in their prime working years, and we were in a demographic lull, basically, during the last crisis. We had millennials who were just beginning their career. Now they're in the thick of it. There's a lot of workers with a lot of skills and a lot of know-how out there in the economy looking for work. That's a potential tailwind. But the second phase of this is, what conversation are we having in 2022 and 23 about the recovery? And I think we do need to acknowledge it will be a recovery phase even at that point, no matter how good, at least in my view, no matter how good of a job Congress continues to do in responding to this crisis.
Last question, quick to you, Brian Cheung, from a viewer. Do you have to have a vaccine to get out of the recession?
Well, I think that for right now, we shouldn't be expecting a vaccine even in the next 12 months or so. The challenge here is that when it comes to economic predictions, no one is factoring in any sort of baseline scenario for when they should see a vaccine, because that's something that's completely out of our hands. There's no way we can use any of the data that we have now to predict if the vaccine is going to come in 6 months or 12 months or even 2 years, right? So I think that we have to not interpret what's happening in the markets and in the financial sector as any sort of reading on when we might expect to see that vaccine. However, when you look at asset valuations, at least on a risk on a basis, when you look at the equity valuations, it seems like people are at least optimistic that in some medium term period, we will be able to see a vaccine. Now, from a health standpoint, we would all like to see that. But again, from where you put your money, it would probably be unwise to be hinging all of that based on a bet for when you think a vaccine could be coming, because even epidemiologists would say we don't know the timeline of that.